welcome to our buy-to-let lender panel. The pressing issues within the buy-to-let market are Louisa Sedgwick, Managing Director of Vida Homeloans, Adrian Moloney, Group Sales Director of OneSavings Bank, and Paul Friars, Managing Director of Zephyr Homeloans. Thanks so much for joining us today, everyone. It's great to have you.
Hi, Owain.
Thanks.
So I guess inevitably there's only really one place we can start this discussion looking at the buy-to-let market. It's the impending stamp duty deadline. Louisa, I'll start with you if I may. Where are we with lender service levels and third-party levels? And have we reached the cut-off time yet where lenders are going to have to say new purchases are just not going to complete?
I think in answer to your last question, I think we have passed the cut-off point in time, to be perfectly honest with you, with kind of 6 weeks-ish to go until the 31st of March. I think it's unlikely that anybody applying for a mortgage now would be able to complete on time. Not less because there's obviously still some delays around the lender community, but also the pressure that's on the conveyancers, the pressure that's on the local authorities as far as searches, etc., are concerned. I think it's highly unlikely that at this point in time they'll be able to reach those deadlines to enable them to complete on the 31st of March, would be my feel. As a lender, we stopped taking business with a view to completing on the 31st of March at the early part of this year. So we've surpassed the time in which we would have expected to get an offer out in time.
Adrian, is that the same for you?
No, well, probably slightly different. I think to Louisa's point, if stamp duty is your sole driver in terms of your transaction at the moment, you're probably going to come across some hurdles, particularly I think in the latter part of the process. We all know conveyancers, I think, are really up against it. If you're in a lengthy chain, then potentially you could come across hurdles that are outside of your control. I think in terms of our own service, we're really proud of what we've achieved through this period. I think we were the first specialist lender where both brands achieved 5-star service at the awards earlier this year, and we've worked really hard to maintain SLAs, and we've managed that through the underwriting team, through managing our proposition well, so being very careful with where we've kept product levels and driven business. Valuers, I think, have done really well as well, to be honest with you. I think we all sat there in April last year thinking, blimey, this is going to be difficult. The valuers have got back out, they've continued to work through challenging and busy times. But I think to Louisa's point is, are we without any notification as to whether or not we're going to have an absolute finish on the 31st of March with stamp duty, or whether it's going to be extended? I think people should be cautious in their approach if that's their driver. Interestingly, I think we're seeing, particularly in buy-to-let, is people looking perhaps at other ways to purchase. We have a bridging operation, short-term funding. And actually, the rates are very competitive there. So you are seeing people go, actually, I can purchase it in one way, knowing that potentially I still reap the benefits of stamp duty, but will look to refinance onto a longer term product afterwards. But, I think we're in early February now. So, it's going to be challenging for anyone who's just going in now, particularly if they're in a chain to get a completion done by the end of March, if stamp duty is their driver.
And Paul, on to you. Are you sort of reflecting those views as well?
Yeah, I mean, I think I'd agree with everything that's been said, really. I think the interesting thing is that point around, is stamp duty a sole driver for a transaction going through or not? So the degree to which transactions may get to the 31st of March that don't make the deadline, but then still go through as a result of the customer having some expectation management. The law firm that we work with have been very clear on instruction that there is a cliff edge as things are currently stated, and the degree then to which perhaps a vendor and the two parties in the transaction may renegotiate price, I think could be interesting to be seen. So yeah, I mean, service level wise, we're okay, but I think anybody starting from scratch today looking to complete by the end of March, they've got to be realistic about that, I think. And obviously, we're all waiting to see if anything does get changed. And I guess the budget is early March, which may be the point when anything may be confirmed, but who knows on that point.
So if I move on then, one of the big defining issues of the last sort of 18 months or so is we've had a bit of mergers and acquisitions activity going on. We've had OSB and Charter Court come together, and now TML and Shawbrook have also done the same. Are we going to see more mergers and acquisitions within the lending community? And how will this affect the buy-to-let market and competition within it? Adrian, you were involved in the first of those on the OSB and Charter Court side. So perhaps I should turn to you and sort of ask, where do you see the market going on these things?
Yeah, look, we're very much looking forward now. It was 14, 15 months ago, I think, now that the combination of our group took place, and we're really pleased with the outcome. I guess we strive to be the best specialist lender that there is in the market. I think it's brought together good skill sets, great culture. We've kept to the multi-brand proposition that we promised at the start, and intermediaries seem to think what we do is good. So, I guess from the outside looking in, people may look at that and think that was a good thing. We might have a crack at doing something similar. And I guess, is it imitation is the best form of flattery? So if we see some more of that, I think we'll have done what we set out to achieve. I think, look, there's some power in numbers that are a good thing, but a competitive specialist or buy-to-let market is important. The more competition we have in this market, the better it is and choices for clients. And actually, I think we've got a thriving market as a result of, having the likes of Vida, the likes of Zephyr, the likes of ourselves in this market to help meet customers' needs.
Paul, yourselves at Zephyr are fairly new entrants to the market. Eyeing up any transactions?
Well, we're actually part of a bigger group anyway, so Computershare Owners, which is a global firm. But I think from a point of view of M&A activity, well, yeah, I mean, I'm sure it will continue. Last time it was very active was pre-great financial crisis, when you saw typically investment banks, buying up specialist lenders. I think probably circumstances a little bit different now. It'd be interesting to see if any do that again after the great financial crisis. But I mean, from a point of view of competition, there seems to be, there's the product that's created in the buy-to-let market is very appealing to investors in such as securitization. So, I'm not sure that we're going to see, any sort of a reduction in competition as a result of further mergers. There seems to be, more competitors coming into it than not, actually. So I think, there's a pretty vibrant sector here, regardless of any acquisitions or mergers that may occur in due course.
Louisa, do you want to chime in on that as well?
Yeah, probably not a great deal to add, to be honest with you. I mean, there are some complementary brands in the market that could work very well together. So, you could see some obvious synergies within some brands. Whether or not that leads to critical mass, or whether or not it needs cheaper funding, etc. Because, as Paul mentioned, the capital markets are open, they're thriving, and they're keen to invest. But on the same token, it's an expensive medium for sourcing money. So, there could be some options available to certain establishments that might want to gather some forces together with a view to having a different funding model. But I think that, yes, there are some complementary brands. Whether we're going to see anything is anybody's guess, I would suggest.
I think Owain as well, 18 months ago, 2 years ago, everyone was talking about the non-bank lenders going for banking licenses, to the point that both the guys have said there, we seem to have a vibrant capital markets market as well for funding. So, that seems to have played out a little bit. But, I think the key in all of this is that, as I said, all the brands you see out there at the moment seem to be having a relatively good time of it in terms of volume and being successful. And again, that just goes back to the bit that from the broker and their clients' point of view around choice, it's a really competitive sector.
Yeah, no, I agree. It's there's been a lot of aims of talking for growth and so on. Now, one of the things that we're really passionate about at AE3 Media and Specialist Lending Solutions is diversity and inclusivity. We include that in the market. So where do we stand as lenders with this agenda? We've seen a big sort of push towards it in the last year for many obvious reasons, importantly. Paul, what's sort of the standpoint at Zephyr, and where are you coming from on your actions there?
Yeah, so there's a lot going on, actually, Owen, and as I mentioned, we are part of a bigger company anyway, so we're owned by Computershare, which are a global firm. So I think just back into the funding piece, it's quite interesting. We've been involved in 3 securitizations now, and investors are much more interested in this type of conversation, as to how to run the business from a governance and from an ESG point of view, which diversity and inclusion is part of. So we've got a global D&I manager based in the States, and there's various, and it's actually one of our global priorities. It's in the top 10 to build out the D&I journey in the broader firm. So there's a number of working groups that take place that cover off Black, LGBT, and there's 2 women's groups, one in EMEA, Europe, Middle East and Africa, and then also over in the States. And just an example more locally, so that group met earlier this month, and there's about 100 attendees there, talking about issues arising from COVID in people's lives and such like. So yeah, what we can also see is that we undertake, as probably most firms do, an employee opinion survey every year, and the questions that are tilted towards the D&I sort of agenda are very much sort of trending up. So it's a journey, we're on it, and we've got a lot of people doing a lot of activity on it at the moment, Owen.
Louisa, we've spoken about this before in other bits that we've done. Where are you sat with Vida now, and how do you see the market progressing?
So, I mean, I think that the biggest thing is that at last there's an acknowledgement that diversity is so incredibly important in anybody's business. And I think that's fantastic, and we should celebrate that, because, if you don't have diverse opinions, then you're not going to drive a good, profitable business. So I think in the first instance, we should celebrate that. I don't think it's different between buy-to-let, specialist or mainstream. I think it's largely the same, because we are just as a result of financial services, and financial services are not typically enormously diverse. As far as Vida are concerned, it's at the forefront of our agenda. And like Paul says, we include it in all of our staff opinion questionnaires. It's building it into the culture. And we also have, as part of our scorecard, as we all will have, diversity is a big part of that scorecard as well, to make sure that we are including not just gender diversity, but every form of diversity, to ensure that everybody has a good, solid opinion, because actually that brings so much value to any business. So yeah, I mean, I'm thrilled at where we've got to in a very short period of time, but as Paul said, there's still a lot to do, and we're still on the beginning of that journey, I think. But I think we should celebrate some of the achievements so far.
Adrian, how's your journey progressing there at SB?
Yeah, look, probably much the same as the guys. I'd echo what Louisa said there. I think as a sector and as a market, I've seen more probably in the last 12 months around this being a focal point than I did in the last 20 years. And that's a really good step forward. I think the work that Barrett and his team are doing, which we've signed up to, is important to bring it to the forefront of awareness, as you said there. Obviously, as we've brought the 2 businesses together, we've got a working group that focuses around this, and we'll continue to look at other avenues to progress it. I think most importantly, I think Louisa said, it's built into our culture going forward, and that everyone is included in that. So I think that, hats off to the industry over the last 12 months. It's come a long way in 12 months, but I think to what both Paul and Louisa said there, we've still got some way to go on this. But I think I think the bit is, we are all in this together, and all seem to be supporting it in the right way.
Yeah. And I will just echo one point that Louisa made there around the fact that, just in terms of benefits that we see in the firm around having that diverse group of people around the virtual table now, is really quite obvious, actually. If I think back to when I was running a different part of the firm, going back 5 or 6 years, when that wasn't a particularly diverse part of the business, to where we are now, it is quite refreshing, actually, and you do get much better outcomes in your meetings, I think.
Yeah, I think it's important in your recruitment as well, because anybody that we're recruiting within Vida, we talk to them about the diversity piece, and how that's influencing a lot of our decisions. And I actually think people find that really important as part of whether or not they decide to work with a company as well. So yeah, I think that's nothing more to say, really.
Yeah.
So one of the things that's been dominating the country, not just the lending market over the last 4 years, has been Brexit, that wonderful term that we've all loved hearing so much about. We've now got some certainty around the trade agreement and how relationships are going to be managed a bit more. Adrian, has that been lending to EU citizens in Britain, and conversely to British citizens based in the EU?
Yeah, so we're currently, we don't have an expatriate range within our product range. We have done historically, but as I said sort of earlier, we've kind of managed capacity and flow whilst looking at proposition and really focusing on our core markets. I think we all watched in December as we got to D-Day, B-Day, whatever you want to call it, in terms of Brexit. And we did post out at the beginning of January for EU citizens living in the UK. Historically, we didn't require permanent rights to reside. We do now need that, or I think I'm trying to think of the term that's there. It's if you qualify under the EU settlement scheme, which I think is if you've been here predating 5 years. So obviously we brought that out. We've made quite clear communication to our broker partners. I don't think we're particularly out of line with what the rest of the market have there. So I think that's just the bit we all faced and all knew that once that deal got over the line was likely to be an additional criteria.
Louisa, I can see you nodding along there. Is that sort of reflecting what Vida's been doing as well?
Yes, absolutely. I mean, we do lend to expats living abroad and obviously buying properties in the UK. But what we insist upon, and it's in line with the new legislation, is we insist that they have a footprint in the UK. So they either have to be a UK taxpayer or they have to have some form of footprint so that we can get some sort of keys data on these customers. And that hasn't changed. So that's the same as it always was. So we're still very comfortable that providing people can prove who they say they are and they do have some tax liability in the UK, then we're quite happy to continue to lend to them, irrespective of whether they're in the EU or beyond.
And Paul, has it been any sort of major adjustment for yourselves?
Not particularly, no. I think in terms of the lending that we're doing with Zephyr, we're not in the expatriate space, so not a great impact for us. I think the Brexit thing, I think, has been felt in terms of movement of physical goods, isn't it, in different industries. So if we think about our business, we do some work in Ireland, both north and south of the border, where we service a number of portfolios. And what we have found there is that, we use a mailing house in the UK, and actually just getting the letters over the water has actually proven a bit of an issue. So it's those sort of things where, the idea that it was going to be frictionless, it's not quite playing out in reality, I don't think. But yeah, in terms of Zephyr, there's no particular impact at all.
A case of watch this space and hopefully the things will settle down for the whole market, I think, generally. Now, we've managed to go this whole session so far without mentioning the last year and what a year it's been. We seem to be, at least in the terms of the market, coming out of things at the moment. But product numbers are still about a third down from where they were pre-pandemic levels. What's driving that? Louisa, is it down to lender service levels and staff capacity, or is it more sort of just hesitation and not wanting to sort of throw too far in? What's the reason for that?
I think your missing products are in the high loan to value bracket as opposed to the generic. I think the sub 75% loan bracket is very well catered for across buy-to-let and across residential. I think it's the higher loan to value market that isn't necessarily well catered for at the minute. I don't think that's as a result of capacity, and I don't think it's a result of a lender's underwriting or appetite. I think what it is that there's so much flux within the market and uncertainty within the market around furlough, even payment, holidays, although we can't call them that, and that's the right. So, even payment deferrals are still alive and well and living in this marketplace. So I think that as long as those things are present and as long as there's still the uncertainty around, what happens post-COVID, I think you'll still see that those product numbers will be slightly restricted, but largely within those high loan to value brackets and not necessarily within your standard lending range.
Paul, is that reflecting where you're at?
Yeah, I mean, I think LTV is certainly a factor, isn't it? Although I think just sort of thinking about something that Adrian mentioned earlier about managing flow, I think it's probably just a case that we've had such a strange year in that pent-up demand that's flowed through with also the stimulus around the stamp duty holiday has potentially meant that the product range that lenders have got has been sufficient to get the flow that they need. So I think what we've just started to observe in the past few weeks is there's probably more incentives been put into some product now. So we've seen a bit of a tick up in number of lenders offering a few cashbacks and stuff like that potentially wasn't as prevalent last year. So I think it's just to me, I think it's more around, it's not around lack of funding, I don't think. I think it's, aside from that higher LTV piece, I think it's more just the fact that the market has been very, very buoyant, and there's been, lenders have been able to manage the flow of business through the products that they've had, I think.
And Adrian?
Yeah, I probably can't add too much more to what the two guys said. I think it is a mixture of credit risk appetite. To Louisa's point, most people want to see what happens with furlough unwinding, what happens with property prices, albeit at the moment they look to be pretty hot in a lot of sectors with what happened with the stamp duty holiday. But actually, there's still a wide range of products out there. Most buy-to-let lending anyway, I put a caveat, was probably done sub 75%. And it is very, very competitive there. I don't think, certainly we brought some new products out on precise mortgages last week, and I see quite a lot of the competition or competitors react to that, which tells you that, even sub 75, it's a pretty active market. And, most buy-to-let lenders I look at or hear from seem to tell me they're pretty busy at the moment.
I can see that the clock's against us, so I'm going to wrap this up with the final question that we've got. Limited company, it's been sort of on the cards for the last 5 years or so since all the tax changes came in. It's had a much higher priority. We're getting some reports coming into the Specialist Lending Solutions office that it's around 50% of business going through limited companies now. Paul, are you getting a lot of limited company business coming through? Or
yeah, indeed, yeah. So as we've seen the influx of purchase business really start to grow in the last 6 months, then the incidence of limited company SPV structures is around 2/3 of the pipeline currently. So I think that will probably only continue. I think we're also seeing within that there's restructuring of existing portfolios from individual ownership into a limited company structure as well, for various reasons that people are taking advice on from a tax or estate planning point of view. Can't see that probably slowing down either. So yeah, we're certainly not anticipating it's going to slacken off in that regard, I don't think.
Adrian, does that reflect what you guys are seeing? And with the 5-year anniversary coming up, are you preparing for a further kick to it this year?
I hope there's a kick to it. None of us will turn down any additional business. I mean, you're right, we are at that 5-year anniversary. I think that the market has, in limited companies, has grown massively over the 5-year period. We've had some new entrants into the market over that period. I think there's probably 20 plus lenders now that offer limited companies, which will just tell you that the absolute demand for it. I think, to Paul's point, in a buoyant purchase market, landlords are going to invest in SPVs, particularly if they've had certain types of tax advice, because there's benefits to that. We've definitely as well seen a point that Paul raised there, people looking to do a change of ownership structure, so going from their individual name into a limited company. And that's been people coming from other lenders, but also some of our existing customers, because we have a process based around that, particularly in the Kent Reliance brand, where they've gone, actually the time is now right. We've been working on the project with their tax advisor and their broker, and they've actually looked to, at this point in the cycle, to move it into an SPV. So I think that is a very buoyant part of the market. I think it'll continue to be really competitive this year.
And Louisa, last word to you. How is it developing there?
Yeah, so not too dissimilar to Paul, really. We're about, I'd say, 70-30 in favour of limited company at the minute. So there is still a reasonably active market in your kind of, individuals buying properties. They tend to be in the lower tax brackets as well, because, of course, there's an alternative to a limited company as they'll find a way. So I think that, that it is still quite buoyant. I wonder if we've seen an increased demand as a result of the stamp duty land tax piece, because, of course, the sale and the purchase through the different forms of structure, that might well avoid the interest as far as that's concerned. So we might have seen something in that as well. But, at the end of the day, that will all play out through the course of the next few weeks.
Very interesting point as well. We'll look at that with the stamp duty stats as they keep coming out. Thanks very much to all of you. I've really enjoyed that. It's been a very cool session. I hope all the audience at home have been enjoying it. And thank you very much to our panel for joining us. And we'll see you all next time. Thank you.